What if a manual journal entry for $600,000 just got posted to your books on a Saturday, with no description, no supporting documents, and no approval? And what if nobody noticed until the auditors showed up 18 months later? Manual journal entries are one of the highest risk areas in accounting. They bypass normal controls, they're entered by humans, and they can literally say anything. Today, I'm going to show you the journal validation app for ERPNext I created, a risk-based validation engine that automatically scores journal entries using a sophisticated percentage-based model, detects anomalies, and uses AI to suggest corrections. I'm showing you how to protect your ERPNext instance from risky journal entries, with 89% time savings and complete audit trail. Let's dive in. Let's talk about manual journal entries and why they keep auditors up at night. Unlike sales invoices or purchase entries that flow through standard workflows with automatic validations, manual journal entries are direct writes to your general ledger. They're necessary for month-end close, error corrections, and adjustments, but they're also the most dangerous transactions in your system. Anyone with permission can debit or credit any account for any amount with any description, or no description at all. Manual journal entries bypass all your normal controls. When you create a sales invoice in ERPNext, the system validates the customer, checks credit limits, verifies pricing, enforces payment terms, and routes through approval workflows. But a manual journal entry? It goes straight to the books. According to the Association of Certified Fraud Examiners, 80% of financial statement fraud involves manual journal entries. The average fraud is $1.6 million. And it takes a median of 18 months to detect. That's a year and a half of fraudulent entries sitting in your books undetected. Most companies handle this with manual review. The controller or finance manager reviews journal entries one by one, maybe 20 or 30% of them if they're lucky. It's time-consuming, inconsistent, not documented, and issues only get caught after the entry is already in your general ledger. What if we could automate this? What if every single journal entry was automatically scored for risk the moment it was created using an intelligent percentage-based model? What if AI could analyze the entry and suggest corrections before it even hits your general ledger? That's where the Journal Validation app comes in. This is a production-ready Frappe app that provides intelligent risk-based validation for every journal entry in ERPNext, with a sophisticated percentage-based scoring model. Here's how it works. At the foundation, you have your standard ERPNext journal entry doc type. We don't modify ERPNext core at all, maintaining complete standards compliance. The Journal Validation app sits alongside and hooks into the Save and Submit events. When you create or modify a journal entry, the validation engine automatically runs. The engine uses a percentage-based risk scoring model where all rule weights sum to exactly 100%. This makes risk scores intuitive. If an entry has an unbalanced amount, that's 50% of your total risk right there. Add a very large amount and now you're at 70%. The math is transparent and calibrated. You define risk thresholds. Typically 0 to 30% is low risk shown in green, 31 to 60% is medium risk shown in orange, and anything above 60% is high risk shown in red and may require approval. And here's the powerful part, optionally, you can enable AI integration. For high-risk entries, click one button and the AI analyzes the journal entry in the context of your validation results and provides natural language explanations of what's wrong, why it matters, and specific suggestions for corrections, including accounting standard citations. Everything is logged. Every validation creates a validation result doc type with the complete risk score, all violated rules, and if you used AI, the complete conversation with token usage for cost transparency. This gives you 100% validation coverage, intelligent risk-based scoring, AI-powered insights, and complete audit trails for SOX 404 compliance. Before we dive deep into configuration and demos, let me show you how quick installation is. 3 commands, 5 minutes. Get the app using Bench Get App. Install it on your site. Restart Bench. Done. The app includes all standard validation rules pre-configured. You just need to adjust thresholds to match your company's risk appetite, which I'll show you next. Now let's go through every single setting in the Journal Validation Settings doc type. I'm going to explain what each field does, why it matters, and how to configure it. This is going to be detailed, because proper configuration is critical for effective validation. Let me open Journal Validation Settings in ERPNext. This is a single doc type, standard Frappe pattern for app configuration. First, the General Settings section. 5 checkboxes that control the entire system. Enable automatic validation. This is your master on/off switch. When checked, every journal entry save or submit triggers validation. When unchecked, the validation engine is completely disabled. Why would you uncheck this? During troubleshooting, during initial testing, or if you're making major changes to your rule configuration and want to test offline first. Enable AI suggestions. This controls whether the Get AI Suggestions button appears on validation results. This requires an AI provider API key which we'll configure in a moment. The AI insights are extremely valuable. Require approval for high risk. When checked, high-risk journal entries trigger an ERPNext workflow requiring controller or CFO approval before submission. This is workflow integration. The app can automatically route high-risk entries to a designated approver. Next, risk thresholds. 2 numbers that define your risk boundaries. Low risk threshold. This is the upper boundary of the low risk zone. Default is 30%. Any entry with a risk score from 0 to 30 is considered low risk and shown in green. These entries typically don't require review, they pass all or most validation rules. High risk threshold. This is the lower boundary of the high risk zone. Default is 60%. Any entry with a risk score from 61 to 100 is considered high risk and shown in red. These entries should be reviewed immediately and may require approval. Amount thresholds, where you define what constitutes a large journal entry for your organization. High risk amount threshold. Default is $10,000. Any journal entry with total debits or credits above this amount triggers the amount high risk rule, adding 30% default value to the risk score. This is your controller level review threshold. Entries above this amount should be reviewed by a controller or senior accountant. Balanced entry. Default is 0.01 or 1 cent. This is used by the unbalanced underscore entry rule. If total debits minus total credits is greater than this tolerance, the entry is considered unbalanced and flagged with a risk penalty. Now that you understand the configuration, let me show you exactly how the validation engine works behind the scenes when a journal entry is created. Let's walk through this step by step. Step 1. User creates a journal entry for $600,000 cash to revenue on a Saturday with no description. When they hit save, the validation hook is triggered automatically, standard Frappe doc events pattern. Step 2. The engine loads settings from the database. Automatic validation is enabled. Step 3. Each rule is evaluated. Balanced entry checks if debits equal credits. They do, so this rule passes and contributes 0% risk. Amount high risk checks if the total amount exceeds $10,000. It does, so this rule is violated. And description required checks for an empty description. There is none. Account combination detects the direct cash to revenue pattern, which is suspicious because it normal accounts receivable workflow. Step 4. Calculate total risk score by summing the violated rule weights. Step 5. A validation result doc type is created with complete details. Risk score 30, risk level low. Now let me show you batch processing. This is how you validate historical journal entries that existed before you installed the app. Very important for initial implementation and for applying new rules retroactively. I'm going to validate all journal entries from January 1st, 2025 through October 19th, 2025. The job is queued. It found approximately 144 journal entries to validate. Complete. Results: 144 low risk. 20 journals passed, 124 failed. Now let me show you the analytics dashboard. This is where finance leadership gets visibility into journal entry risk across the entire organization. Top left, summary statistics. In the last 30 days, we validated 161 journal entries. 131 were low risk, 81%. 12 were medium risk, 7.5%. 18 were high risk, 11%. Average risk score is 20.7%. Validation trendline chart shows average risk score over the last 30 days. Top violations report is critical for continuous improvement. High value amount is our biggest issue with 118 journals. I can drill down into any violation. I can export this to Excel, send it to the team, and say here's what needs better documentation. This is how you turn validation data into process improvement. Let's recap what we've covered today. The problem: 80% of financial statement fraud involves manual journal entries. Average fraud is $1.6 million. Manual review only covers 20 to 30% of entries. It's time-consuming, inconsistent, and reactive. The solution: journal validation app with percentage-based risk scoring from 0 to 100%. 6 standard rules with weights summing to 100%. Automatic validation gives you 100% coverage. AI-powered insights from AI. Complete audit trail for SOX 404 compliance. And it's 100% Frappe and ERPNext standards compliant. What you saw today: Every setting explained in detail, you know exactly how to configure this. Demos of low, medium, and high-risk entries. AI analysis providing expert-level guidance in seconds. Batch processing of over 4,200 historical entries in 18 minutes. Dashboard analytics with actionable insights for continuous improvement. And a real-world example where validation prevented a $600,000 revenue misstatement. Here's the ROI in detail. For a company with 500 journal entries per month, manual review costs $25,000 a year in labor. And that's assuming you actually review them all. Most companies only review 20 to 30%. With journal validation, the automatic validation takes less than a second per entry. Plus intangible benefits. Fraud deterrence, employees know entries are being validated automatically. Audit confidence, you have 100% coverage documentation for your external auditors. Error prevention, we showed a $600,000 revenue misstatement caught today. Team productivity, your controllers focus on high-value analysis instead of manual review drudgery. And peace of mind, your CFO sleeps better at night. If you found this helpful, hit that like button and subscribe for more ERPNext automation and AI integration content. Drop a comment if you have questions, or if you want to share how you're controlling journal entries in your organization. Thanks for watching this deep dive into journal validation.